Okay, trade recap. What I did today, I kind of started off on a very high time frame. I actually started off on the weekly. What do I see here, right? We can see that we tapped into a weekly gap. What does this mean? So we can see here that we are trading at all-time highs, right? Where is the thing? Path. Okay, so we're trading all-time highs, right? We're pushing all-time highs. We're pushing all-time highs. We start to chop a little bit more, and then we start making a move down, being right here, right? We start making a move down, but we're still very bullish. We're still in this extreme premium, and we don't really move down extremely far. We only move down around 1,000 points, which is far, but compared to the huge move that we made the past month, it's really nothing. So we move down, and what do, right? We tap into this weekly gap. Now, what I want to see out of this weekly gap was the reaction, right? You can see right here, the reaction off this weekly gap was we just wick it and we continue up. So if I move down to the 4-hour time frame, we can see here that we wick the daily gap right here, and then we start creating these big rejection wicks towards the upside, right? So we're creating these rejection wicks towards the upside, we're wicking the lows, and we're closing bodies at the highs. So extremely bullish overall in the higher time frame for price. So all I saw coming into the day was we were trading above here, we were trading up here. I realized that we were trading inside of this bearish 4-hour gap right here, right? And this high right here, this London high, had just swept out these relative equal highs right here, had just swept out this intermediate high, so this was a protected high up here, right? Now, what I did from there was I moved down a little bit, and I just kind of wanted to see a little bit lower time frame structure because we're rejecting off of this first presented of this entire distribution leg down. So I'm like, maybe we go for some sort of rebalance, and my overall draw on the day, of course, is going to be the all-time high right up here. We're just trading so close to it, and I don't want to trade against, like, I'm not trying to short against this huge move up that's delivering out of this weekly gap, right? Because this is a market maker buy model. So what we do is we are at a, like, we make an internal draw or an external draw. We come down, we mitigate internal liquidity, and then we come back up to external liquidity, right? So we're kind of just in this huge big uptrend, and we can see this here because we're clearly like respecting these bullish gaps, right? We're respecting these bullish gaps, and we're disrespecting these bearish gaps right here. And we just keep doing that day after day for the past 2 days. So, what do I see? I see this hourly gap gets inverse to the downside. What do? I check the 2-hour. 2-hour, completely different story, right? We respect this 2-hour gap right here, and we also sweep out this intermediate low inside of the gap. So just off this, right before open, I'm extremely bullish. My draw for the session was firstly going to be this high right here, the London high slash 4-hour intermediate high, and then I'm also looking to target the all-time high. So coming into open, what I saw was that we are trading an obvious range, right? We have an intermediate high above, we have high resistance above, and we have high resistance below. So what I like to do during these days is I like to kind of just scale down to a lower time frame and kind of check, do we have any conditions, internal conditions that can send us either higher or lower, right? So in this scenario today, we had this sponsored 30-minute gap resting right below. And pretty much coming in the day, what I journaled was my condition for higher was I just want to see 930 open low, and then I want to see it close high towards this London high, and then maybe catch some sort of continuation higher. So I'm just going to move down to the lower time frames, play this out. I'll put this on like this. So you can see here at market open, we wick down into this 30-minute gap right here. And if I move to ES and I go to the 1 minute, we can see here that ES also prints a huge wick at market open right here, right? ES prints a huge wick. It does not mitigate the gap though. It does not mitigate the 30-minute gap that ES mitigated. So if I move here on ES, but I was still confident in taking longs because look what ES did, right? ES swept out this 15-minute intermediate low. So technically, we do not have to go for this 30-minute. So this is a valid SMT with this 30-minute gap sitting down right there. We have true manipulation on both indexes. So from here, I was just looking for price to come up, take out that high, print a 5-minute gap, and then I can get some call to all-time highs, right? So what do? We do not do that at all. Price action just becomes kind of sloppy. We start chopping a little bit. I saw some people take this short here, but I didn't want to take it because of the fact that all-time highs is just right here, and the higher time frame is just so bullish. I'd rather take a long, right? So what do we see next? We see price kind of just chop here for a bit, and I was looking for some sort of caught long up here, but I never really got it because we never inversed this gap here. There was a 2 minute that formed up there, looking at this gap maybe, and then we were kind of just moving down, right? Just chopping down, 10 a.m. opened up. We had this orange folder, print this huge news wick down here. So my scenario was, I want just 10 a.m. to open lower. We come take out this data low and we sweep out this intermediate low down here. Maybe ES mitigates the same gap. ES mitigates the 30-minute gap. And then I check the hourly. What do we have? 10 a.m. candle had just formed a hourly fair value gap that was unmitigated. So what I was looking to see was, I was just looking for 10 a.m. to open up, displace down into this gap, and then catch a long towards all this low resistance up here, and then all-time highs. So I just play this out. You can see that's kind of exactly what happens here. If I go to ES, the 1 minute around this exact same time, it's 10:08. 10:08 right here. You can see ES is starting to make a recovery towards the upside, and I'm pretty sure we have no, we didn't make it. Yeah, we end up making a 5-minute gap here on NQ. We end up making a 5-minute gap here in NQ. You can see that right here. We end up making this 5-minute gap. So I was willing to take this 5-minute gap higher. We had our stop rate right here. We took out the data low. We displaced this hourly on both indexes. We displaced in the hourly. So structure was looking very nice. True manipulation, stop rate, everything was looking good. And this 5-minute just never inversed, right? We're kind of just chopping a little bit more. There was a 15-second that some people took in here, but I don't like taking lower time frame inversions like that. I'm not confident on the lower time frames yet. So what do we see? We see this 5-minute fail. We print this intermediate high up here, right? We print that intermediate high in the 5-minute gap. So we come down and we end up taking out this intermediate low. Oh, sorry. We come down and we resweep this intermediate low. So we have another stop rate inside this higher time frame gap. And what do we see, right? We see 9:15 open up. We see 9:15 generate a high, move down lower, giving us our stop rate. And then pretty much we're just anticipating a move back up now. Now, what I want to show you is, if we look at ES, what has ES done? ES has not only reswept the hourly intermediate low, just like NQ, it has also displaced down into that 30-minute gap that it edged at the start of the session, right? So you can see right here, this is the 30-minute gap that it edged. You can see right here on the opening wick on that 9:30 candle, we edged the gap. And you can see right here, we ended up fully mitigating it, displacing all the way through, and we close above it. So after I saw that close above, and after I saw ES actively rejecting out of that gap, I was like, all right, I want to take longs from here. Structure looks amazing. We have true manipulation, and we have an obvious abundance of LR leading towards all-time highs. This is extremely obvious for me, right? So what I do is I just look for the higher time frame inversion. We ended up having this 3-minute inversion above that I wanted to see. So I waited. We ended up getting that 3-minute inversion right here. So I took the trade, right? I took the trade. I just ran my stop at the body, and then I just targeted a 1-to-1 because I wasn't extremely confident in us ripping all the way to all-time high yet. I was like, it's a Friday, and we might just slow down in lunch and PM sessions, so I'm not really sure. So the idea was I would go break even when NQ hits this high, and to add extra confidence on this trade, if I look at ES on the 15-minute, right? So this is the candle that we're currently trading on. Let me just mark out this line right here. If we look at ES in the 15-minute at this exact same time, right? So what time is it on Q? 10:29. We have ES 10:29 right here. ES is trading below a 15-minute sponsored gap. So this is an agreed upon draw on liquidity on ES, pretty much guaranteeing that NQ will hit this intermediate high and giving you a perfect break-even spot when ES hits this sponsored 15-minute, right? Because this agreed upon draw on liquidity, meaning if you're wrong and price is bearish on the day, then ES will hit this agreed upon draw on liquidity, this sponsored 15-minute, and then move lower. So you pretty much have a guaranteed break-even on this trade before you even enter in and risk any money, right? So enter in, and we chop a little bit. ES ends up hitting the 15-minute at this exact same time. I think it hit at 10:37. We end up coming up here, coming up. We end up chopping a bit, and then I get my perfect 1-to-1 right there, and I was done for the day. I really like this trade. I saw people take a 1 minute down here. That's also pretty valid if you have enough discretion. I just like the higher time frame version because that's what I'm confident with. But yeah, really good trade day, and really happy about my performance today.